Hello, I'm Donald Leggett, and welcome to the latest Focus IR Investment Trust interview with Charles Jillings, Chief Executive at Utilico Emerging Markets Trust. UEM's investment objective is to grow long-term returns by investing in infrastructure, utilities, and related equities in emerging markets, the growth megatrends as Utilico described them. Utilico has delivered a 9.5% return on net asset value since inception, with an annual yield of 3.8%, and have significantly outperformed the MSCI World Index over the last 3 years. Welcome, Charles.
Morning, Donald. Good to be here.
Good morning. Now, you and the investment team travel internationally a lot, meeting the management teams you invest in, as well as those on the UEM watch list. Now, getting a feel for the economies on the ground is what you guys do. You're just back from Latin America, so why don't you kick off our discussion by describing the countries and companies you visited on your travels?
So we're just back from our annual trip to Latin America. I've been going for the last 20 years. Every time I come back, I'm more energized. But this time was certainly different. There is way more momentum being achieved in Latin America than I think people recognize from the outside. We went to Brazil, Sao Paulo. We went to Colombia, so Bogota, Medellin, and we went to Mexico, so Mexico City, and we went up to the border town of Tijuana. I was hugely impressed, and I think just two headline things to note, which will flow through a bit. Brazil has invested heavily in their infrastructure to unlock their agricultural and commodity industries, and I think that is powering, if you want, our investments. And Mexico, with its large population, cheap labour force, but adjunct to the world's biggest market, is benefiting from, a real trend that's driving their economy. I think just to note, when we look at the indexes for, say, Brazil and Mexico, they're dominated by banks, they're dominated by mining companies, so they tend to be very cyclical. And I can understand that investors who are looking for a long-term return, looking at those markets, look at the indexes and say they're volatile. What I would say is, if you unpack it and look at the infrastructure and the utility sector, there's a lot more stability being achieved in the performance of those investments. And certainly UEM's investments in Latin America have beaten the Latin American index 12 months, 3 years, 5 years since inception. So I have a fair amount of confidence that that'll continue without the volatility from the wider market. When we went, we had 50 meetings. We conducted a number of site visits. We looked at, existing investments and prospective investments. And I came away with more insights and more learnings from those opportunities that we visited.
So tell us what you learned from your site visits and tell us what investment opportunities you saw.
So just to take two, and as I said, we had a number of meetings over 2 weeks. In Colombia, we have an investment in Coffee Colombia, which is infrastructure investment company listed in Bogota. And we went and visited a toll road outside Bogota, which links Bogota to another major city in Colombia. It's only 86 kilometers, but the terrain is very tough, a lot of mountainous region in between. So as a toll road, it's actually got almost, I think, in Latin America anyway, the most bridges and tunnels. I think it has something like 89 for a 100-kilometer road. But the most interesting thing was learning that it cut the journey time from 6 hours to 3 hours. And you could feel the energy from everybody that we were meeting about the ability of this toll road to not only cut down the journey between those two centres, but actually link everything in between. and it's always, it always reminds me that the emerging markets are about what I call raw growth. If you make an investment, you can unlock value, and definitely walked away with a very positive view that they could drive traffic and therefore make good returns on the investment that they'd made. The other was in Mexico. We visited a number of FIBRAs. Now, FIBRA is a REIT structure in Mexico, and they operate, a lot of them operate logistics centers and manufacturing parks. And the striking thing for me was, and you would expect, if you look at one of these types of companies, say in Eastern Europe, they run at over 90% capacity. And the trick is, can you get them to 100%? Well, guess what? In Mexico, because of the near shuring and the near shuring trends, they're running at 100%. In fact, they're almost building to order. And so, the rentals have gone up by 50%. And, Mexico is definitely benefiting from all the nearshoring trends. So very exciting to see them running at 100% capacity.
Which takes us very neatly to nearshoring and Mexico's benefits from it. Explain the latest developments in the nearshoring trend. You told us previously that Mexico have overtaken China to become the biggest exporter of goods to the US, which is a hugely significant thing. So tell us more. You've been to Tijuana, you've been to Mexico City. Tell us your learnings.
So my learnings would be that if you want the friction between the US and China, I think corporates have now taken on board, recognized that it's going to be a long-term trend. If you want, it's not going to diminish. And therefore, the investment that's going in to cities like Monterrey, to cities in Mexico City, to relocate manufacturing into Mexico is extraordinary to see. I've never witnessed the amount of investment. And, every time you hear about a gigafactory, say, going in from Tesla, you have to understand there's probably an equivalent amount for all the supplies, all the infrastructure that needs to go around it. And so clearly Mexico is benefiting from NAFTA and the agreement with North America whereby to participate in the market you need a certain percentage of your products to be locally produced. And therefore, there's a big drive. And I think this is my take, I think it's accelerating because people can see that if you want, the US is not going to back away.
This is not going away. This trend is not going away.
Certainly not. And, North America is, I think, now over 80% of Mexico's trade partner and growing. And, they are gaining in automotive, but they're gaining across the piece in manufacturing.
So here we go, a very pertinent question for you. How did UEM position itself to benefit from this nearshoring trend that you've witnessed on the ground?
So I think we have several investments in Mexico. Omar is an airport operator. They operate the airport in Monterrey, and if you want, the international passenger growth, which is reflective of the relationship between Mexico and America, is growing very strongly, but so is the domestic. And I'll come on to that. But it's benefiting from, if you want, the sheer growth in economic activity between the two nations. One thing to note that I did come away with is there's been an increased formalization of the Mexican employment base. So since 2022, 1 million people have joined the formal economy. And that's expected to continue because obviously corporates are applying, a high standard and looking for, a formalized workforce. But the benefit of a formalized workforce is they earn more. Earnings are roughly 70% higher in the formalized than the unformalized, and all of that is spilling over into a stronger consumer, local consumer. So we're seeing strong growth in passenger numbers, and Omar is benefiting. And today is 16% above pre-pandemic levels in terms of passenger numbers. The other investment we've got is Traction, who are a logistics company. They shift goods internally in Mexico, but they also shift them cross-border into the US. Very strong performance in terms of their metrics. And talking to them, they believe the next 3, 4, 5 years will achieve the growth that they've achieved to date. And that's been really impressive. We visited one of their centers in Mexico City, and one of the topics that came up was AI and how that's assisting them in everything from, if you want, route planning, but also through to maintenance. At what interval do they bring in trucks and buses for maintenance, and how do they benefit from that? It's extraordinary to see the momentum that they're building at the top line, but also the margins that they're beginning to grow because of scale, but also much more technology and efficiency.
Both the US and Mexico have elections this year, so is there a danger that might disturb the momentum that you've been describing?
I don't think so. If you look at Mexico, the incoming candidate is currently enjoying a 20% polling above the other two candidates. She is very likely to get elected, and therefore we don't see much change, given she has, if you want, the blessing of the current Prime Minister. If I look at the US, under the current Biden administration, they're benefiting. Under a Trump administration, we don't see much change. You have to remember, Trump renegotiated the NAFTA agreement. So this is actually a policy that he put in place, and we don't think he'll unpick it. It's been a real benefit. No doubt there'll be a lot of noise around immigration and borders and those issues, but the underlying reality is the business community is benefiting from that agreement, and Trump put it in place, and he can be proud of it.
Very good. So praise for Donald Trump. There's the thing. Likewise, LatAm has successfully attracted foreign investment in specific areas such as renewables and hydrocarbons, which UEM has investments in. Do you see that trend continuing?
Yeah, very much so. Just like the rest of the world, everybody's looking at energy security, and everybody's also looking at decarbonisation. The interesting thing that I don't think the world really focuses in on is 93% of Brazil's energy today comes from renewables, either hydro significantly, but wind and solar. We have investments in wind and solar. Moving forward, we expect, if you want, further investments in wind and solar as they seek to get the economy to be 100% renewables, and they can achieve that. And our investments are certainly performing extremely well.
Let's take a specific look at your top 10 holdings. 4 of them are actually in Brazil, and your top 10 holdings are quite significant for the trust. Why? Let's just ask a very simple question. Why is Brazil, in terms of infrastructure and utility stocks, so important? Why does it produce so many of these stocks that are useful for your growth?
So I think the first thing to note is we're bottom-up investors. This is an outcome of, if you want, our confidence in the individual asset and our confidence in those management teams. But Brazil has, over the years, brought in really strong governance structures, and you can rely on the institutions to, if you want, protect investments. And so we can be there as a confident investor. I think the outcome, if you want, if I look at one of our investments, Santos, is that it's benefiting from all the related infrastructure investments that have been put in. So the road, the rail, and all the other infrastructure. Santos is a port serving Sao Paulo, and the volumes have gone up significantly. And the port has become, if you want, there were two other operators that are now operating at 100%, and Santos's capacity that they've recently added is clearly allowing them to grow. So, very excited. And if I just told you about Santos results, which I think are, extraordinary by any normal expectation, their quarter-on-quarter results revenues were up 40%. And that's mainly because of volume, but also because of pricing. They achieved a very significant pricing increase. EBITDA was up 100%, and profits before tax up 127%. So these are phenomenal performances, and I think they reflect a momentum that's being built up in Brazil. And I go back to it. The farmers have invested in all their facilities and production capabilities, and they continue to improve, if you want, their farming metrics. The government's allowed rail and road, and it arrives at the port. And the port, if you want, is a beneficiary of all of this, if you want, momentum over time. The other investment in Brazil that's worth touching on is a transmission company. It's our top investment. It's one I absolutely love. They have a sort of dual underpin for me. The first is a regulated infrastructure asset in the form of transmission, which you can model out 30 years. And they generate cash flow. They're very disciplined, but they have a layered across the top added capacity. And their ability to both win contracts, but then execute them quicker than the timetable, cheaper than expected, and then operate them efficiently makes them an absolute standout investment. And it's been in the portfolio for 15 years. I can see it here for the next 15 years because you go back to the renewables thrust. The renewable energy is in northern Brazil, the wind and the solar, and therefore it needs to be transmitted down to southern Brazil where the manufacturing hubs are. So very excited about them, very excited about their prospects.
Which takes us to the Federal Reserve. The world, and Latin America included, is waiting for the Fed to cut interest rates as inflation comes under control. Given the latest data from America, when do you expect that to happen? And what happens when interest rates do finally get cut? Because at the moment it's hanging over emerging markets, rather.
So I think it's hanging over all markets. If you watch the volatility, depending on whether the market thinks interest rates are coming down tomorrow, coming down next year, it's impacting on sentiment in all markets. I think I certainly was more optimistic that interest rates would be coming down starting the middle of this year and fairly firmly for the rest of this year. Clearly, the US economy continues to surprise everybody in its strength. What I would say is, if I look at Mexico and as a, if you want, manufacturing hub, and if I look at Brazil as agriculture and commodities, the longer that economy stays buoyant, they benefit from that. So it's secure as egg, if you want, in as much as I don't think it matters day to day quite when the US reduces interest rates. What I do think, though, is Latin America set about reducing their inflation. It's been much more effective. So today, their inflation is trending down into levels which most of the central banks would say we're comfortable with that. And there is a gap between, if you want, interest rates and inflation, which will allow them to reduce interest rates when it happens. And, the markets will benefit in terms of valuations. Companies will benefit from cost of capital, which reduces. But in the meantime, I still have a positive bias because, as I say, these two economies serve the US, and so I'm ambivalent actually as to what happens next.
It's a very interesting response from you there, Charles. We're coming to the end of our interview, so if you could describe the portfolio's performance in 2024 so far, the outlook for the rest of 2024 and beyond, and given the disconnect with the current net asset value, just tell us what your thoughts are on that discount.
So, dealing with the portfolio, through 31st of March, we were up 12.5%, which is well ahead of the MSCI index. And looking forward, I think the performance for this year is going to be strong again. One thing just to note, I looked at the earnings for the last quarter through December, and I think over 80% of our investments, top line was up. Over 75% of our investments, EBITDA margin was up. So these are companies that are performing well, and some of them, like Santos, outstanding. So I'm confident about the outlook for the coming year. I'm confident about our investments. The discount is clearly frustrating. We continue to buy back, and we'll continue to buy back because it's a good investment in its own. But we're working hard to try and share the energy and understanding of the emerging markets.
My final question, Charles. Why should investors add UEM to their watch lists? Ticker UEM. Take note. Ticker UEM. Why should you add UEM to your watch list?
I think consistent performance, outlook strong, portfolio investment companies undervalued, and clearly we're trading at a discount. So a good time to add, and I think you can sit still, enjoy the yield, and I think the performance will come through as it has done in the past, and I have confidence about the future.
So you can expect growth, and you also get a dividend.
Correct. And hopefully you get capital closure in terms of the discount.
Charles Jillings, Chief Executive at Utilico Emerging Markets Trust, thank you so much for speaking to us today. As always, it has been an education. I always learn so much when I speak to you. Thank you so much. For more Utilico company information and to access the company bulletin board, please go to the Utilico Investment Trust pages on London South East. And meanwhile, follow us on Twitter @_FocusIR_ or @London South East. You always get good stuff on our Twitter accounts, or register on London South East YouTube to receive alerts to more Utilico Investment Trust interviews just like this one. All that remains is for me to say thank you very much indeed for watching.